All right, anyone claiming this Bitcoin cycle is just like the others needs to put down the peace pipe. We have entered uncharted territory, a new game. But the ending is the same. The 4-year cycle, it might have broken. But despite it all, this could be Bitcoin's most bullish moment ever. The banks are in trouble, and more cockroaches are coming. Even Jamie Dimon said it. And while the bears are running victory laps, they're about to get absolutely wrecked. Because not only is the S&P 500 collapsing against Bitcoin, but global M2 is exploding. And Bitcoin is definitely going to close that gap, but there's more. Gold. Yeah, old man gold just did something that could mean a 557% Bitcoin eruption is on deck. Check this out. The last time gold topped out in 2020, Bitcoin ran 557% over the next 12 months. Ladies and gentlemen, Bitcoin flies once gold slides. All right, so a 557% run would send Bitcoin to roughly 618,270 cuckbucks. So, could the longest Bitcoin consolidation be setting up the most violent bull run in history? Well, strap in and smoke 'em if you got 'em, because a fistful of bullishness is coming your way. Send it!
For me, a directional bet. So we're going to 1 million, and after that we're going to 10 million. So it's just a matter of time. From that standpoint, I'm taking a long-term view, and everyone, I've been advising people to get into Bitcoin at $20, $200, $20,000, and $120,000, because at the end of the day, it is a scarce value. It's a digital gold and has all the properties to be anti-inflationary and anti sort of a centralized government spending. So it's a directional bet.
And you always believed in Bitcoin. I mean, we spoke with you. CNBC Squawk Box
Yes.
interviewed you back in 2014.
Correct.
When the price of Bitcoin was around $450.
Correct.
And here we are with Bitcoin above $120,000.
Correct.
So how do you explain what happened between then and now in the 11 years since that interview?
Well, I think first and foremost, the global debt of the governments has increased dramatically. The continuation of spending by OECD countries has continued on, and the central banks quantitative easing and printing, releasing more fiat. And when you have all of this combination of factors, then you have Bitcoin shining. That's one. Second, it has been institutional adoption. So I think what BlackRock has done for the industry has been profound, and Fidelity in terms of allowing the access to Bitcoin in a very easy manner, because that was not the case before.
All right, so now what's really happening behind the scenes? John Malden just dropped a piece called The Final Crisis. This is our future, and let me tell you, if he's right, the Federal Reserve is running out of ammo, and fast. Turn out the lights, the party's over. Even Willie Nelson saw it coming at 92 years old. He's seen more cycles than Powell and Yellen combined. Debt-driven growth feels good until the lights go out. And Malden says we're stumbling in the dark again. Ray Dalio calls it the big debt cycle, an 80-year credit binge that ends the same way every time. Currency collapse and a reset. And here's Dalio's playbook in plain English. 1. Private and public sectors get deep in debt. 2. The private sector implodes so the government prints money to bail it out. 3. Then the government itself hits a debt wall and nobody wants its bonds. Holy shit. 4. So they print more. And 5. Boom! The currency dies. Sound familiar? Take a look around. We've already checked off steps 1 through 4. Stage 5 is underway right now. Fed is trying to cut rates without reigniting inflation, while Washington spends like a drunken sailor. Dalio calls the endgame the death spiral for central banks, when they have to print money just to cover the interest on the money they already printed. That's not policy. That's a Ponzi. And guess what happens next? Stage 7, debt restructuring and currency devaluation. A quote, beautiful deleveraging if you're lucky, a hyperinflationary recession if you're not. In other words, the final crisis has begun. You can't stop the cycle, but you can front run it. Michael Saylor just did it again. Breaking. MicroStrategy buys 168 BTC for 18.8 million. They're now up to 640,418 BTC total. While Wall Street's playing with paper, Saylor's buying the hardest asset on earth. It's almost like he knows how this movie ends.
If you're more open-minded about the entire thing, and you just embrace the idea that this is a new kind of company, it's not a bank because it's not regulated. It doesn't take consumer and commercial deposits. It's not that kind of bank. It is a financial kind of company, right? And it's a new form of company. There are banks, there are insurance companies, et cetera. So a treasury company is a company that issues securities in order to acquire capital. A commodity, really, you're issuing securities to buy a commodity, and if you pick a commodity that happens to be scarce, you create a very powerful feedback loop. Right? Work through your mind. If I do this on Bitcoin going up 50% a year, I can easily pay 10%, capture the 40% spread. That is an amplifier.
Yeah.
If I issued the credit to buy soybeans,
Yeah. Without the KGAR, then it doesn't work. Yeah.
or natural gas or crude oil or some other, commodity that returns 3-5%, anything less than the cost of the credit, then I've run the feedback loop in the opposite direction. I'm destroying capital as fast as I can. The business is not really much more complicated than that. It's just no one's ever seen it before, which is why people just have a hard time getting their head around it.
And if they don't believe in Bitcoin. Now you've talked about the different preferreds and how even just one could work, and it gives you leverage.
That right there is why Saylor's playing 4D financial chess while Wall Street's still stuck on monopoly money. He's literally turning Bitcoin into the new foundation of global finance, a bank replacement built on truth, not trust. You know what's crazy? Gold just pulled a classic move, and every time this metal spikes, Bitcoin loads the spring. The last time gold topped in 2020, Bitcoin ripped 557%. If history rhymes, that means a run from 111K to roughly 618K could be on the table. Gold is screaming Fiat's days are numbered. And Bitcoin's just sitting over here like, hold my brewski. Because gold is the floor. Bitcoin is the ceiling. Fiat trends toward infinity. Bitcoin trends toward freedom. And what we're seeing right now has played out before. Check this out.
Doing fundamental trading, and he hated the model building. He said, but he loved the fundamental trading. He loved reading the newspapers and reading the tickers and the news tickers and getting ideas. And it turned out he was, for a while, very, very good. So we put the models aside for a while, and we traded, and we did very well. We did very well. But it was a gut-wrenching experience. One day you walk in and you think you're a genius. Oh, my positions are in my way. Look, and the next day you walk in and they're against you and you feel you're a dope. How could I have done what I did, and so on. There was no rhyme or reason. It was just, you put your finger in the air and you try to sense which way the wind is blowing. I'll tell you one story to illustrate the craziness. So it was a time when gold was going up. Gold had been you couldn't buy or sell gold, and finally you could, and the price was rising, and it was rising, and we had a deal where Lenny Baum and I, where we'd each have our own account. I was the boss, but we each had our own account, and in our own account, in fact, we both bought gold. We're supposed to be independent. We both liked gold. The gold was going up. It started at $200 and $300 and $400, $500. It got to $500, which by today's standards would be like $1,500 or $1,800. And I said, this is a very high price. I'm getting out. And I sold my half. But Lenny, I think you should. No, you don't know how high this is going to go. You can't. This is going to go very, very high. I said, okay. So he stayed. It was $600. It was $700. It was $800. Got to $800. That day, I happened to be talking to a friend of mine on the phone who was a stockbroker. And in fact, he was my stockbroker. And I said, how are things, Dick? And he said, oh, well, they're fine. This morning, my wife, Lucy, came into my closet and cleaned out all of my old tie clasps and cufflinks and went downtown to sell them. They were gold. They were gold, see? I said, well, you having a hard time in your family? Why is she, so your wife said, oh, he says, you know, she's a jeweler. I said, yes, I know that. So he said, so she only has to stand in the short line. I said, what do you mean, the short line? He says, don't you know that people are lining up and standing for hours selling their gold? I said, no, I didn't know that. Thank you very much. We had a phone in those days. If you picked it up, it was a different phone. If you picked it up, you went right to the floor of the commodity exchange. And I got Lenny in the office, and I put the phone up to his ear, and I said, Lenny, sell the gold. In fact, and he said, no. I said, Lenny, I'm the boss. Sell the blankety blank gold. I was more emphatic than that. He said, all right. So he sold the gold. Maybe it was $810. Oh, he was mad. And the next day, we came in, and it opened at $830. And he said, I told you. By the end of that day, it had dropped 25%. It was down to $600, all in one day. And it never, of course, went back up. So that is an example of common sense and very good luck. The good luck. If I hadn't called my stockbroker the day I did, Lenny would have held on to that gold. It went back to 200 after a while. We would have ridden it all the way down, I think. And so it was just plain luck that I have. But it was at least common sense that I thought if everyone in the world is trying to sell their gold, how long can it be going up? You know, there is such a thing as supply and demand. So there it was. So that was what it was like to be a fundamental trader. It was stomach-wrenching.
That's the same setup Jim Simmons saw in his early gold trade. Parabolic run, then a new asset takes the throne. Only this time the throne is digital. And right now, Bitcoin is sitting where gold was in 1976. Undervalued, misunderstood, and ready to melt faces. Bitcoin is the truth machine. It moves first. Yields are puking. Spreads are blowing out. Banks are sweating through their suits. And Bitcoin sniffing what's next. Forced printing. And when they turn those printers back on, Bitcoin will front run the Fed and leave every other asset gasping for air.
Let's not depend on the government officials and central bankers who sort of pushed us down this road to think that they're going to solve it themselves or feel the pressure to solve it without any external pressure. Is a bit wishful, a bit of wishful thinking in my books. We need individual American citizens and businesses to adopt this better money and opt into it. And I think that's how we get through this at the end of the day.
Yeah, I think that's exactly what's going to happen. I think it's really encouraging to hear things like that, Square. I mean, it is quickly becoming a matter of utmost importance. I won't go all the way to life and death, but depending on events, it could become a matter of life and death for businesses to do exactly what you just described, which is just put a little, and individuals, put a little bit into Bitcoin. Because you can see what, the corollary to the Genius Act and the stablecoin gambit to support the treasury market that we talked about earlier is you're not going to support the stablecoin market, or the stablecoin market's not going to be big enough to support the treasury market with Bitcoin at 200,000 or 500,000. Like, he needs like $1 million Bitcoin, $2 million Bitcoin to pull along the number of stable coins, to pull along, the T-bill issuance. It basically, we wrote it as, the U.S., the Treasury seems to be standing up Bitcoin de facto as a competing reserve asset to gold. And then they can duke it out. Gold and Bitcoin can duke it out. We'll see. That's exactly what has to, and that will rebalance things. That will take things away from the financialized guys. That will take power away from the Fed. That will do all the kind of things that you need to. It's to your point. It's a market. It will be a market-driven incentive system. That will be really. It will narrow wealth inequality. It will. But again, the only way it narrows wealth inequality is if people start buying some every week and self-custody it, because otherwise, if you don't self-custody it, they're just going to rug pull you, like they rug pull, you custody it with, you just have to custody it yourself. You just, learn, it's so easy to do. There's very good services that'll help you do it. Like, just do it. Because otherwise, you're just re-centralizing it elsewhere, and it opens up the risk for rug pull down the road.
That's Luke Groman, the guy the Treasury actually reads. And when he says Bitcoin's a competing reserve asset, he's hinting the U.S. is already quietly positioning it next to gold. And it's not just gold. The so-called safe S&P 500 is melting when priced in Bitcoin. Since 2021, the S&P has lost 80% of its value in Bitcoin terms. That's not a dip. That is a revolution of the denominator. For decades, the S&P was the yardstick of wealth. Now the yardstick is on fire because when the measuring stick melts, everything measured by it looks fine until you price it in Bitcoin.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, bro.
We have reached the meme phase of the fourth turning. People literally trading gold and stocks against Bitcoin. What's next? Buying burgers with Satoshis? Oh wait, we already do. Steak and shake, baby. Now before we land this rocket ship, look at our likes.
4 times, maybe. I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan.
I also have another theory called max pain theory. And that is like the most painful outcome for the most people is the most likely outcome. So if we think that Bitcoin volatility is always going to be low, and we just gradually step up to 1 million and to 10 and to dollar parity with sats, that is the best case for the world. Everyone has a long time frame to accumulate. Everyone has time to buy. And I don't think that's going to be the case. And I think a lot of people realize this. If you look at Saylor and strategy, he's buying anytime. Like it doesn't matter if it's a top. He doesn't care about dips because there is this urgency because the time is running out to buy Bitcoin at these low prices. So we're going to see a fast run up, and gold is a good parallel for what we're likely to experience with Bitcoin. If you look at the picture circulating right now on the internet, there are people lining up, forming queues to buy gold, and gold is at an all-time high. So nobody wants Bitcoin when it's in the low 100Ks. But once we get to like $500,000 per Bitcoin, I think the world's going to wake up. Central banks are going to wake up, and nation states are going to start joining the race. And that's when you go to 1 million very quickly and beyond.
Do you see that? That's called the writing on the wall. The U.S. has added $400 billion this month alone. That's $25 billion a day. And at this pace, we're going to hit $40 trillion by 2026. Debt to GDP, 124%. That's Banana Republic math in a pinstripe suit. We are living through the end of the fiat illusion. Every chart that looks bullish in dollars is a funeral chart in Bitcoin. And as Michael Saylor said, Bitcoin is the new form of money, a new form of wealth, and a new form of freedom. Gold is the past. Fiat's the problem. Bitcoin's the future. The old world runs on paper promises. The new one runs on proof. The cycle is ending. The reset is beginning. And the writing on the wall is in fluorescent orange. There can be only one. Holy Crap, Mining Disrupt is just a couple weeks away. Get those tickets to Mining Disrupt 2025. See the future of Bitcoin mining up close in Dallas, Texas, November 11th through the 13th. The biggest names in the industry. Cutting edge rigs, Bitcoin, and AI integration, the signal you won't get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. Hey, hope you guys enjoyed this one. Smash the like, subscribe, and give us a pamp by sharing the Sound Money Gospel. Set those notifications because we got tons of great stuff coming your way. Sophie, Dante, Oceans, all dropping heaters, so keep your head on a swivel. Hey, I love you guys. Catch you next time.
Peace.
If you prefer to go down with the ship, you.